Hi, welcome to Coffee with Katie. This month, rather than doing a traditional coffee session, I decided to do a multi-part series on estate planning. Over 50% of individuals age 55 and older do not have an estate plan in place. And it's so important. So, to kick off the series, I first talked about the key documents that you need for an estate plan. And then I touched on the broad differences in trust structures in my last video. Today I'm going to talk about gifting within the family. And that gifting within the family, I'm breaking it up into two parts, using the annual gift exclusion and then also using your lifetime gift exclusion. So on the annual side, in any given year, any individual can gift $15,000 to any other individual. So if you are married, you and your spouse could each do that. Let's say you're married, you have 3 children, and your goal is to shift money out of your estate because you're concerned about estate taxes. You could start with a very simple gifting strategy of gifting to each of those 3 children. That's $90,000 per year. If you do that for 5 years, you can shift $450,000 very easily out of your estate without having to go into more extensive trust work, for instance, if you just wanted to kind of get your feet wet with the process. So that's an idea there. But a quick tip, there are certain things that are excluded or do not count towards gift taxes. So if you are helping to pay for education or medical bills for another individual, and if you pay those directly to the provider, it does not count as a gift. So just a quick little tip there, if you want to help a grandchild that's already in college pay for their tuition, that's a great way to do it. The next thing that I want to talk about is your lifetime gift exclusion. Once again, any individual can transfer during their lifetime, whether they do it in gifts or if it's in their estate upon their passing, a total of $11,580,000. So once again, in your lifetime, you can transfer over $11 million. Now, if you're married, your spouse can do the same thing. That's right now, we're at the highest rate, the highest level that it's ever been. No promises that it will stay there. We'll have to see what happens, but it may be something you want to take advantage of sooner rather than later. And using part of that unified credit, we often see that if they want to fund some different trust strategies, or they have a large piece of property, maybe a home or ownership in a business that they want to transfer to the next generation, then they can use a portion of that unified tax exemption to shift that piece of property over to their heirs. One of the advantages of doing that is that you remove future appreciation. And so if you're concerned that your estate's going to continue to grow, if you're moving out some of these larger assets, then now you've shifted the growth to that next generation or to your intended heirs. So it's a great way to kind of control the size of your estate going forward. But word of caution, I've talked about the federal gift tax and annual tax exclusions. Recognize that states may have their own transfer taxes that are due. And so make sure that you understand what the rules are for your specific state, and also generation skipping taxes. Make sure to talk to your tax advisor about that as well. So if you are considering putting strategies into place to gift or shift money, make sure to include your professional team into the conversation. Thank you very much. I hope that you've enjoyed this coffee session. And I am also including for download a document that talks about lifetime gifts to your children. So it kind of dives into this a little bit further, and I welcome you to take advantage of that. If you have any questions or would like to reach out, you can reach me at kbrown@mortonbrownfw.com. Thanks. Have a great day.